Hey everyone, welcome back to Corporate Decoder, the place where we decipher the confusing world of business filings. And trust me, this latest one from Antiaging Quantum Living Inc. is an interesting puzzle. This is essentially a company that used to be called Accession Incorporated, and they're trying to get their shares registered for sale. They've been through a few changes in ownership and leadership, and now they're looking to offer up a whole lot of shares, over 4 million of them, which are coming from existing stockholders selling their shares. So what does Antiaging Quantum Living Inc. do? Well, it is a bit of a mixed bag. They started with an online advertising business in the New York area, which sounds pretty straightforward, but then they expanded into China, focusing on technical development, platform maintenance, and health management services. This dual focus makes them a bit of a chameleon company, trying to thrive in different markets and industries. Now, a key part of this filing is how these shares are coming to market. It all stems from some promissory notes issued in late 2024. These notes, initially unsecured and not bearing interest, were later amended and then assigned to new entities. And here's the kicker, these notes converted into over 4.2 million shares of Class A common stock at a fixed price of 30 cents a share. This whole process of amendment, assignment, and conversion is a common way for companies to bring shares into a registered offering, often when initial financing or debt needs to be converted into equity. Let's dive into the money side of things. When we look at their financials, we see some pretty stark increases. Take revenue, for example, for the 6 months ended the 30th of September. 2025, their revenue jumped to over $681,000. That is a big jump from just over $375,000 the previous year. That is an 81% increase, which sounds great on the surface. But here is where we need to dig a little deeper. For the 3 months ended the 30th of September 2025, revenue was $390,164 compared to $173,174 in 2024. That is over a 125% increase. The company says this jump is due to growth in their online platform technical operations, support, and maintenance services, and also some limited operations from a new subsidiary. This is where the story gets interesting. While their old online advertising business in the US seems to be taking a backseat, their expansion into these technical services, especially in China, is where the growth is apparently happening. However, all this growth comes at a cost. For the 6 months ended the 30th of September 2025, they had a loss from operations of just under $190,000. That is a big improvement from the nearly $412,000 loss in the same period last year. So they are reducing their operational losses, which is a good sign. But their general and administrative expenses also saw a significant jump, going from around $541,000 to over $705,000. This suggests a lot of overhead is involved in this expansion. Despite the revenue surge, the company is still in the red. For the 6 months ended the 30th of September 2025, their net loss was around $195,000, which is substantially better than the over $411,000 net loss in the prior year. So they are heading in the right direction, but they are not yet profitable. Looking at the longer term as of the 30th of September 2025, they have an accumulated deficit of over $1.6 million. This means since they started, they have lost more money than they have made. They also have a very small working capital of just over $23,000, which can be tight for a growing company. Now here is a big red flag. For the 6 months ended the 30th of September 2025, 100% of their revenue and 100% of their accounts receivable came from a single customer. This is a classic concentration risk. If that one customer walks away, the company could face serious financial trouble. This customer dependency is a huge vulnerability, and the auditors, they are not mincing words. They've included a clear statement about substantial doubt about the company's ability to continue as a going concern. This means that based on their financial situation, there is a real question about whether the company can survive in the long run without significant changes or funding. They are hoping to improve profitability and get more cash. But there is no guarantee this will happen. Then we get to the risk factors, and there are many. They admit they have a limited operating history with their current business model, especially with the new expansion into China. They worry about their ability to raise more money, which is crucial for growth. They also have a management team with limited experience running a public company, and they are heavily reliant on one key executive. This lack of broad experience and heavy reliance on one person can be risky. And let's not forget about the stock itself. It is currently trading on the over-the-counter market and falls under the SEC's penny stock rules. This means trading can be cumbersome and potentially less attractive to some investors. They mentioned that their stock is listed under the symbol AAQL, and the last reported sale price on the 11th of December 2025 was $0.6230 per share. This is a classic scenario for smaller companies trying to gain more visibility and liquidity. Looking ahead, their strategy involves expanding their online advertising platform in the US and growing their darling Doctor brand in China by increasing their distributor network and service volume. They have some aspirational long-term goals too, like large-scale store expansion and exploring things like AI health management and even community models. But these are still very much in the early stages. So, what is the verdict? Antiaging Quantum Living Inc. is in a transitional phase. They show impressive revenue growth in their newer ventures, particularly in China, which is positive. However, they are still operating at a loss, have a significant accumulated deficit, and are heavily dependent on a single customer. The auditor's concerns about their ability to continue as a going concern are serious and highlight the risks involved. This filing tells a story of a company trying to reinvent itself, moving into new and potentially more lucrative markets. But they are facing the classic challenges of high-growth companies managing expenses, securing funding, and diversifying their customer base. The key for them will be to translate this revenue growth into actual profits and reduce their reliance on that single customer. Until then, investing in their stock remains a highly speculative move. Alright, that is our breakdown of Antiaging Quantum Living Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we discuss these filings and much more. Thanks for watching. See you next time.